All right, everyone. Here we are with ticker symbol Srne, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And let's jump into this chart. So, Sorrento Therapeutics has been in a bullish run. It's reached up to $7. The last time I did it, it was around the $6 range. And I want to go ahead and apologize to all investors and viewers. I know that some of you have actually taken the time. I was going through comments now because sometimes I have trouble even having time to go through the comments. I'm just one guy and many different ticker symbols. But I saw your guys' comments and I needed to go ahead and take the time to do Sorrento. So I apologize for those of you that are probably looking for a ticker symbol to be seen. And I know that not only just Sorrento, but many people request different ones. And I try my best to get to all of them. I'm just one guy, like I said, versus a lot of ticker symbols, and I'm trying to come up with a remedy for that. So I do want to make it aware for all investors that at some point I will have some form or shape of ability, right, to go ahead and do a broader spectrum of a lot of different ticker symbols. I hope that it will be something that will help many people, and it's in the works. It's coming, and I want more people to be able to gain access to more ticker symbols. And not only that, but every single investor should be aware of what other things are going on and what other charts are looking like, because there's a lot of opportunities to jump in on stocks that you may be overlooking and make some quick cash or quick gains, or even buy at a discount and jump in and hold for long term. But let's go ahead and jump in here to Sorrento. So Sorrento has actually ran up. Let's go ahead and see this here. And I'm gonna put this at the highest point, because even though this resistance level is key right now, it's super close to the price. And I just want to put emphasis on the highest point, because the highest point right now is probably the most important point for the bulls in this whole entire chart, in this bullish recovery here. They already broke through one of the highest points they needed a breakthrough, which was back at 723. And here we are now. So what is the 50-day moving average? The 50-day moving average is 694. As long as we're above it, the bulls are in control. And the moment we're below it, the bears are in control. Now, for the 50-day moving average to not catch up to the price, the bulls need to break through this resistance, and that's 788. They need to turn that into a support, break away from it, reach newer highs, new resistance levels, and pull further away from the 50-day moving average in an upward direction. So I want every single investor to be aware that 788 needs to be turned into a support so that the bulls can continue this momentum and the 50-day moving average does not catch up to the price. Now, on the other hand, we have what the bears want, and the bears want to break through this support. This support level here is 730, and if it gets broken through, you still have room in bullish territory to pay close attention to how this stock behaves and see how it's reacting between the support level of 730 and down here at the 694 range, which is our 50-day moving average. You have that chance to look at what's going on, how is it reacting, how quickly is it moving to newer lows, and are the bulls taking over the chart, or are the bears tearing this one down to newer lows? So it's going to be very important to keep that in mind and pay close attention to how the stock is behaving and how quickly is it moving down, or are the bulls reappearing and bringing this one back up. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.